Thank you, Carl and Sarah. Welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. The fate of the record rally, that's front and center today as we kick off a critical week for your money. The investment committee is standing by with the setup and much more. Joining me for this hour, we have Bryn Talkington, Joe Terranova, Steve Weiss, and Jim Lebenthal. Before we get the discussion going, let's get a quick check of the markets right now. You can see we're in the green across the board. The Dow up fractionally. The S&P up about 1/3 but within striking distance of its own new all-time high. The NASDAQ hitting an all-time high, up about 0.75%. Really, I think that's where we have to start, Joe. The markets, they pulled back last week after that softer than expected jobs report. Some concerns about the economy coming up. We have a very critical week for your money. We have 2 inflation reports and also the revision of the previous year's jobs numbers tomorrow. Just when you're seeing a lot of green on this board right now, in your mind, does that mean that this bull market is intact, or there's still some questions? Could it be in jeopardy this week?
Well, certainly the momentum as it relates to the bullish nature of the market right now is intact. And I think tomorrow, as you cite, the BLS statistics are going to be incredibly important. I think it is going to it doesn't need to solidify the rate cut next week. It really is going to be about how many rate cuts potentially we're going to get. So I know there's a lot of conversation about the historical nature of September and the struggles that September generally can present. You go back over the last 50 years, I think September's down somewhere on average about 1%. However, I think there's a uniqueness to this September, and the unique element is, well, you have the Federal Reserve, which is actually going to be cutting rates into an economy that is not a recessionary environment. So I think that nuance needs to be factored in, and the bullish momentum can remain intact in that environment.
Could that revision open up the door for possibly a 50 basis point cut? If you look on the CNBC Fed Watch tool, slight chance, about 10% of that happen.
I think this is more about the path of rate cuts for the remainder of 25. How many rate cuts do you get after the rate cut, which I think we all know with a high degree of certainty is going to be delivered next Wednesday.
Bryn, talking to you, agree with Joe here. I mean, do you think that tomorrow, especially that jobs revision number, could that solidify the fact that we're going to get a rate cut coming up just 10 days away when that Fed makes the decision? And could it kind of give a sense of the path that we're going on? Or could it raise some concerns about the economy? I mean, I'm seeing some estimates here. If you look at Ed Yardeni, he put out a note. He believes the revision could be downward anywhere from 450,000 to 750,000.
Yeah, I mean, the revisions are what has everyone, frustrated, obviously, with the magnitude. I agree with Joe. I think we're going to get a rate cut. I think that, Powell's been clear. He doesn't want to cut rates, raise rates. And so if we get a path and we're going to start getting a few rate cuts, I will say on the economy, when we go back and look at the quarter of earnings we just had, earnings were up 11% versus, up 4%, which is what expected. And within the Mag 7 stocks, I think their earnings in total grew 22%, double the market. And so I listened to a bunch of these earnings calls outside of some retailers and some other specific companies. You're not hearing anyone saying the economy's struggling. And then on top of that, you have data centers are now becoming a really meaningful part of GDP growth versus historically, just the consumer. And so to me, it's hard to think that we're really going to go off the rails economically when you look at earnings, when you look at all the manufacturing, just specifically with data centers. And so I think if we start getting a small amount of rate cuts, earnings continue to grow, we're going to continue to push to higher levels.
So, Weiss, I want to come over to you. I mean, Bryn saying it's hard to believe we're going to see anything that's going to make us think we're off the rails economically. But what about the markets? What about investor sentiment? Are you worried this week at all about investor sentiment changing and the secular bull market maybe hitting some type of snag?
I'm not really worried about investor sentiment, to tell you the truth. It just seems it's always positive. Even in down markets, let's hold it and not sell it. Except for the real panic moments, I don't see that coming. But yeah, I think every day we actually get information on the economy, and lately none of it's been good. So while earnings were good, that's sort of backward looking. We see the jobs. I don't expect any revisions because the head of BLS is out, and the revisions were all her fault. So without them and with Trump just having complete roughshod over it, we shouldn't see it. Now, I'm being facetious, but the numbers, the economic numbers are declining. That's unquestionable. Where the Fed could go 50 instead of 25 right now.
Next week?
Yeah, right now we know that tariffs aren't going higher. And in fact, they may be taken off completely. So if they're taken off completely, there goes inflation. right? I'm talking about a Supreme Court decision. Don't know when it'll be, but they're fast-tracking it. Then I think you have a clear path for the Fed to continue to cut, and I think they should cut because of what's happening with the economy. Now, the other question, of course, the other side of that is if you do away with the tariffs, then there's a consumer actually doing better and the economy's not weakening. But what's really weakening jobs is AI. And that's very, very clear. And that dovetails into Bryn's comment about data centers. So I think that's just going to be an ongoing story. And I'm not sure that that Fed cuts will be able to meaningfully reverse jobs. So right now, you stay with the winners. If you take a look at earnings last quarter, it was very strong, but it's also centered in just relatively few companies, not broadly throughout the S&P.
Are you sure investors are always going to stay positive? I want to show a chart really quick.
No. I'm making a generalization.
Well, I know you're making a generalization, but Evercore, they put out a note over the weekend, Julian Emanuel and his team, they were looking at margin debt. Now, the data is not necessarily new. It actually came out a little while ago, and it only actually tracks up to, I believe, July. I saw you nodding, Joe. But I think when you look at margin debt at an all-time high, right now, it's a lot of confidence from investors. And Julian Emanuel points out that a lot of that is based on the strength in the job market, that people have jobs. They're feeling pretty comfortable. If we see data that changes that picture, and also just the reality, as you mentioned, AI is disrupting a lot of hiring, especially entry-level jobs. Does that change the investor willingness to invest on margin and honestly just take some of these riskier bets that seems to be pushing the market higher?
Yeah, well, look at it this way. Whatever it is, 5%, 10% pay 50% of all taxes in the U.S., something like that. You've really got a bifurcated economy. You've got those that are under pressure, have been under pressure for a couple of years now in terms of rising prices, in terms of wage growth being flat, not matching it, and in terms of, I'd say weak, very weak job growth. They're going to continue to be under pressure. So the question is, can the other part of the economy that accounts for most of the spending, can they bail out the economy? And how important is it to have those that can't in terms of what we're looking at? I think it's important, but they're not going to be focused on. So my view is the market's kind of toppy now, but I see no reason to sell.
Well, I think that's a great question, because if you know anybody that's an accountant, a consultant, a lawyer, AI is disrupting things. Consultants especially, I hear from them. Engagements are making a lot less money right now, and a lot of other industries in the white-collar areas, they're being disrupted.
Graduates can't get jobs,
I mean, that's entry level, but you're talking about the high-end income earners. Those are the people who are doing a lot of the spending. Their jobs are being disrupted as well. Jim, you're in the unenviable position of listen to what everybody else has to say and kind of giving your opinion. What do you think?
Very patient man, by the way.
He's very patient, very patient and very calm.
Unusually today. Anchor man. He is the anchor man.
Is there something coming up this week that you think that could derail this rally, that could change sentiment in the market and shift investor dollars away from tech and other areas with a lot of growth, maybe back to defensive trades like staples? Keeping in mind, we do have gold hitting an all-time high this week.
Yeah, so I've got two different perspectives here. And the first one dovetails with your question, which is you said this week. I think the risk this week is that actually nothing's really going on. Yes, you got Oracle earnings tomorrow, but at this point, the earnings picture in a backward-looking sense is already in place. As far as CPI, PPI, yes, it matters. Of course it matters. But it would have to be pretty dramatically hot to turn the Fed away from rate cutting next week. So I think really what the problem is that this market, if it's going meaningfully higher, is going to rely on earnings growth. Bryn pointed that out. And we're not even into the pre-announcement season, let alone the third quarter reporting season. So this is kind of Dullsville as far as this week goes. And that could leave a little bit of room to the downside as the buyers have really kind of outspent themselves, in my opinion, at this point in time. As I look forward past this week, as I look to the end of the year, there's a lot of things to like, including a Fed that's cutting rates, including profit growth, including deregulation. If you want to know what the one risk to my generally quite rosy outlook is for the end of the year, that risk is actually that the tariffs get overturned. Here's why. That will probably require a return of $150 billion of collected tariffs so far. That will require more debt issuance by the Treasury, putting upward pressure on interest rates. It will also be stimulative to the economy if that $150 billion just comes back into corporate America. That will be stimulative. It will probably put sustained upward pressure on inflation. And while the administration will find new rules, new statutes to use in order to implement those tariffs, that is actually a risk that I'm looking at. I think at this point, what we need more than anything is trade policy uncertainty, and the legal trajectory here looks like it might increase that uncertainty.
Certainly in the last several days, the retreat in yields is a significant story. It's a significant story for all investors. You have a 2-year, I believe, at its lowest level since 2022. The 30-year at 4.70. That's a 3-month low. And you've got the 10-year pressing towards 4%. I'm hearing a lot in the asset allocation world about investors that are saying, okay, I don't need to take the equity risk. I'll actually use high yield as an equity replacement as these yields continue to push forward. So you're beginning to get a little bit of a competition there where
have you seen those spreads?
Fixed income is starting
high yield spreads?
Yeah,
I mean, it's looking more attractive.
No. High yield spreads
are as tight as
like crazy.
Historically tight
spreads. I was about to say, because I mean, bonds actually had a negative return in September. That's what I was asking you in August, excuse me. But so you're saying that
overall for the year, though, it's been a strong year for investment grade, for high yield. Right. And what investors are now doing is the expectation is, if in fact you get lower yields, you continue to get that push towards lower yields, you want to have the quality in fixed income, owning investment grade, and potentially using it as an equity
Joe, if I may, and Frank, let me do this quickly. I mean, your point is well made about lower yields. Do bear in mind what's going on in France and the United Kingdom and several developed nations where yields are spiking right now. And they're spiking in response to fiscal conditions that are bad, okay? Budget deficits that are really bad in continental Europe. And what I was saying, and I am concerned about the tariffs being overruled for this reason, is that if our fiscal deficit situation gets worse, we could see those yields spike in a hurry here.
Yeah, we'll still be the best house on a bad block. You know, if we have a lot more ability to fund our treasury than they do. So I harbor the same concerns, but I also think there's a positive to it. And that means that margins for companies will be going higher if we do away with tariffs.
So, Brent, I want to get you involved in this conversation. We're talking about bond yields. Are you agreeing with Joe here about, well, I don't want to put words in your mouth. You go ahead.
Well, I think that you have to think about if yields are coming down, like there doesn't seem to be a recession on the horizon. I get this like event that Jim is talking about. That would have real impact because Scott Bessent was talking about it this weekend. The Treasury would have to pay that money back. So that is definitely like an exogenous event that we'll have to watch. But I think that if you think about yields coming down, there's real estate. You look at houses and total real estate in the United States is about a $35 trillion asset class. It's well larger than annual U.S. GDP. And so if yields start coming down and you start getting actually a little bit of thawing in just the real estate market as whole, that is very positive for the economy. It's very positive for home builders. It's positive for Home Depot. It's positive for private real estate. And so I do think there's this silver lining of rates coming down if you're not having an event causing them. And I think that is also, you're also going to see that we haven't seen any impact from the bill that was passed, the OBBB that has passed. I think it'll take several months, if not going into 2026. And so if we can glide into 2026 with just the economy weakening but not stalling, I do think those stimulative natures of the bill, as well as rates coming down and what that will do to the real estate market, will be very positive for the economy writ large.
Right. You know, it seems like we're talking about like it's already kind of preordained that we're going to a rate cutting cycle as opposed to just possibly one rate cut. Just want to bounce something off if anybody jump in. Morgan Stanley out with a note. Headline, choppy price action in the short term. They basically said with the Fed still focused on the potential for inflation and labor data weak but not bad enough. There's questions in terms of just how much the Fed can cut in the near term. They think that's going to lead to some choppy price action this month and maybe even in October.
I'm sorry, Steve, but real quick, I agree with that premise, and that's why the BLS revisions are important tomorrow. CPI on Thursday is important. Next week, you're getting a rate cut, but thereafter, I'm unsure.
Yeah, I mean, look, I think the base case remains 25 bips. However, I think you've seen a reaction in the market.
But the first of many, or just
bips.
One, and then we'll wait and see?
It's the first of many. But that's
well, what's giving you all that confidence? Because we're going to get two inflation reports that could be very sticky. Jay Powell was okay with 2.9 in the last PCE, but if we're at 2.9 here, what gives you the confidence they're going to keep cutting?
Well, let me give you the clarity by finishing my thought. My thought is the first of many, but the timing of the many is uncertain and will be dependent. You've got a race right now, and the race is the economy versus inflation. So if you figure that and it's how the Fed adopts tariffs in terms of inflation. If they think it's one and done, we've seen the worst of it, then they may be confident to go in successive meetings. but they want to get in front of a declining economy, which, talking to CEOs and talking to investors that are credit investors, they do think the economy is just continuing to decline, last quarter aside.
I mean, I'm looking at the estimate for core, 3.1%, the estimate for headline, 2.9%.
It's going to be a hot number. I think it's going to be a hot number this week.
Brent, I see you nodding. I mean, let's say we just come in line with these estimates. Do you see us on a rate cutting campaign after that, or is it wait and see and maybe wait and see for a while?
I think at this level of inflation, we're about 100 basis points too tight on the short end. But do understand that the Fed will want, as long as we're not in a recession, the Fed will want Fed funds to be above inflation by about 100 plus basis points. And so, I mean, I think that you have to understand, read these numbers, and I think that's going to decide how many rate cuts we do. Chairman Powell's been really clear. They don't want to do this herky-jerky where they're raising, stopping like we did in the 70s. They want to go on a glide path. And I think that glide path would be 2 to 3. And I don't think one number, but I do think we have a lot of unknowns. The tariff impact really, there's been a lot of studies that we really haven't seen the impact of that yet, and we'll start seeing it this quarter, next quarter, if it has been an inflationary impact. So I think we'll get one rate cut, and then, just the timing of the calendar, we should get 1 or 2 more. But I don't think we'll get a full 100 basis points until we get the all clear that the inflation from tariffs has truly been just a one-time event.
All right, I think the other question right now is, where do you want to put your money? Wolf out with a note, positioning in favor of financials. They say they continue to favor a mix of defensive growth, defensives, and early cycle stocks. Our top sector for new money is financials, given our view that the yield curve will continue to steepen. Joe, agree, disagree?
Well, look, we have an overweight. We have a significant overweight, well above 30%. We've had that since January of 24. However, I've said some of the money center banks, the valuation, you can make a strong argument, it's getting a little bit stretched. I think, what does that lead you to do? If you're looking at the financial sector, there are some industries within the sector that had previously been very strong, but have been correcting recently. One of those is the insurance industry. You have names like Chubb and Allstate and Hartford Insurance, which have pulled back and corrected. I think on the other side of that, you're going to get a pause that refreshes. You could look at some of the asset managers, the brokers, and then also the regional banks. We had a deal today. You had PNC, which purchased First Bank Holdings for $4.1 billion. That gives them well over $25 billion in assets in Colorado and Arizona, and it really expands the footprint for a super regional like PNC. So right now, regional banks are coming back into favor. You're hearing a lot of conversation. I'm reading a lot about small caps, and this is the moment where you're seeing the revival. And I'm not going to dispute with what you're seeing within the actual market, because small caps have been trading much more resiliently over the last 4 to 6 weeks.
Jimmy, I want to come over to you. Your pick for us on Friday, we were all here together, or you and I were here together, I should say, with Citibank. In your mind, is right now the time for regionals? Is it time for the big banks? Where would you put your money to action?
Honestly, I think it's all of the above. And, I would include the asset managers, which have gotten cheap recently, the Blackstones, the Apollos, the BlackRocks of the world. BlackRock actually has done pretty well. But I do think that the base case here has to be that the economy continues to expand, that interest rates go lower. I know I was talking about risks before. A base case has risks. But the base case is continued expansion. The budget bill, which Bryn pointed out is stimulative, and there will need to be lending for that. And we're here at the New York Stock Exchange, and I have noticed, and I think we all have noticed over the past few months, that IPOs have picked up. We're hearing more and more of the ruckus behind us when a company goes public. So the things that we've been waiting for are happening. Banks, and of all stripes, Joe, you've made the point about regionals for quite some time. You've been right. I've made the case more on the money center big bank side, and I've been right. Steve's been talking a lot about Goldman Sachs over a long period of time. The point being here is they're all working, and they should be working. I do think they're going to continue to work.
Jimmy, one point of note here. I know you're saying the IPOs are happening, but are they actually working? I want to give a hat tip to our Mike Santoli, his weekend column. If you look at some of the big IPOs, you're laughing.
I didn't say they were working. I said this was good for capital markets.
But if they're happening and not working, is that going to continue to be good? If you look at
all right, no, it's a good
60% off its post-IPO pop. If you look at Chime, 45% bullish, about 55% CoreWeave, 50% off its post-IPO pop. they've been happening, but they don't seem to be working, at least not right now.
Frank, you're talking to somebody who really does have as his training value investing, all right? So these things like the Figmas and CoreWeaves of the world that shoot up, and I mean, a few years ago, I can remember Rivian doing the same thing, or Beyond Meat. Look, guys, caveat emptor. I'm not sitting here recommending you buy the IPOs. I'm sitting here saying they're coming, and it's benefiting the capital markets of companies like Goldman Sachs, like Citigroup.
We do have Klarna on Wednesday, so this whole room might be filled up with a whole lot of people on Wednesday as well. I want to continue talking about the alternative asset managers. Goldman's Costin coming out saying those valuations, as you just mentioned, they have yet to recover their post-election highs. Brent, I'm going to come over to you. You and Joe both own Apollo. Is that a good place to put some money? I mean, we've heard about the tailwind of the idea of 401ks taking private assets. Is that enough of a tailwind? Are you concerned about them not really being able to cash out of their other investments, which seems to be weighing on this basket of stocks, at least in recent weeks?
Well, so I own Apollo and KKR, and I think that as we talked about small caps, other areas to invest in, to the point that you haven't seen these companies go back to their highs. I think if you think we're going to have a solid economy, I would put my money here versus, let's say, a small cap, because where you have these companies are continuing to grow AUM in the high teens. Their fee-related earnings are also in the high teens. There are these continuation vehicles, right or wrong, okay, that are coming out to create, I'll say, liquidity in air quotes. But I just think, and also a lot of these companies like Apollo own insurance companies. And so I think you get a lot of really high quality revenue that has a very long duration. And so I think as we have these uncertainties in the economy, these private asset, these publicly traded private asset managers are a really great place to allocate for a future day of economic growth.
All right. A couple of names that we own, just to throw them out, that have worked remarkably well: Bank of New York, Interactive Brokers, Northern Trust, and Charles Schwab. Each of those working really well. It doesn't mean your JP Morgan, your Goldman Sachs, or Morgan Stanley can't work, but you can diversify into some of the mid caps for the financial sector.
By the way, headline on CNBC.com, private equity giants, they raid Wall Street as fundraising talent wars heat up. One of the names mentioned in there is Goldman Sachs. Weiss, you on Goldman Sachs. How do you feel how Goldman Sachs is positioned right now with the idea that we could be on a rate cutting campaign, as you mentioned, a lot of competition out there for talent, a lot of competition to getting those private assets into 401ks. How do you see Goldman set up?
Goldman is just, it's a franchise. And it's a franchise that I think is at top of the pack. As somebody who's a client of the big firms, their service is just so far above the others. They make it the easiest to do business with, and I'm talking from big investor and a big asset holder standpoint, by far. They've got a deep bench. Look, I think they're positioned well. And when the underwriting cycle fully takes hold, Jim's right. I mean, it started. Their pipeline, like everybody's pipeline, is tremendous. So I think Goldman's going to do fine. I think it's just one of those permanent compounders that you want to hold. Not the only one. I mean, I think there are others as well, JP Morgan clearly, but as I look at valuation, sustainability, and size of the business that's much more manageable, we don't know how JP Morgan's going to be managed when Jamie Dimon eventually leaves, right? He turned that company around when he got there. He's done a phenomenal job. Like that faith as lieutenants, there's only one Jamie Dimon. Whereas we've seen great CEO after great CEO at Goldman Sachs because their bench is so deep. So I'm staying there. There's no reason to get nervous at all about it.
All right. You mentioned JP Morgan. Joe and Jim, you own JP Morgan. Jim, your thoughts on JP Morgan in this current environment with the idea, as you all seem to agree, that we're going to at least a cut coming up in a few days and maybe more after that?
Yeah, I'm a very strong believer in JP Morgan, and it starts with what I was saying a minute ago, that I'm a very big believer in the financials. And one of my credos is that if you're going to own an industry, if you're going to overweight an industry, you have to be in the best of breed for that industry. JP Morgan is that. And it accrues to them not just in me saying a platitude like they're best of breed, but when you think about banks that get in trouble, who's the savior? Who comes out on the other side of a banking issue looking stronger? It's JP Morgan.
How about American Express and the performance that it has? American Express trading towards an all-time high. Take that as a read into the high net worth, affluent consumers' condition as it relates to the economy.
Some of the notes out saying spending has really held up. And as some of you, I believe it was you, Weiss, that mentioned it's higher income consumers are doing a lot of the spending. Before we button up this block really quick, Joe, I'm just looking here. You got a lot of regional bank ownership. Citizens, First Citizens, Fifth Third, Huntington, M&T, et cetera. I can go on and on. Are you seeing more consolidation after this PNC deal today? We also, I can't remember what bank it was, but last time we were here together.
Yeah, I think that's the expectation that you will get further consolidation. You should get some deals. I also think the regulatory relief is significant as it relates to the regional banks. And then lastly, you just have the broad-based effect of seeing more capital move into small cap index funds, and that benefits regional banks as well.
All right. Broadcom shares moving higher again today, right now up about 3 1/3% after its post-earnings pop last week. Joe, coming over to you. You own Broadcom.
Following through once again. Listen, I am somewhat surprised by this. I had said last week that the expectations were very high. I felt as though the stock looked a little bit exhausted, but certainly as a shareholder, you're happy to see this type of performance. I do think one thing fundamentally that is going on underneath the surface is it's very clear that OpenAI is diversifying its exposure. That doesn't mean it's entirely detrimental to Nvidia, but its spending is going to other places. Hock Tan had spoken previously about a $10 billion order. We're learning now that probably that $10 billion order is coming from, quote unquote, new customer. That new customer most likely is going to be OpenAI.
Yeah, it's according to reports. By the way, you said you're a shareholder of Broadcom, obviously. You're also a shareholder of Nvidia. We're going to show the 1-month chart of both of these stocks. You're going to see a very clear inflection point between the two stocks over this last month. Nvidia is down almost 7%, and you saw Broadcom's performance up over 13.5%. When you look at these two stocks, the inflection point right there is earnings. You can see where the Broadcom earnings are. You see Broadcom move significantly up to the upside. Are you concerned at all that Nvidia is losing its moat? Are you concerned at all about a pullback? We talked about this last week, maybe a 20% pullback that you might see every quarter that would certainly disrupt your portfolio at least. I mean, just because of the weighting of Nvidia. Joe?
Yeah, I mean,
Weiss?
look, volatility presents opportunity. It's not risk. So it's a short-term displacement unless caused by something that's real fundamental. As you point out, this has happened every quarter over the last year with Nvidia. They beat, they meet, they beat, and then the stock trades down because so many else come in, raise their price target, talk about a major beat, so it's a sell in the news, they bought it in advance. There's just so much going on, so many cross currents. We don't know what's happening with China, right? One day it's on, one day it's off in terms of the H20 chip. And that's a big part of their business. So will they get that resolved? That's the big question. If not, when you hear Jensen Huang talk, there's an insatiable appetite for their chips, for Blackwell, now the next generation Blackwell, that they can't even meet in the U.S. So I'm not worried about Nvidia. Given its growth rate, sure, it's expensive, but given its growth rate, the peg is not overly out of sight. Broadcom, on the other hand, I think Broadcom is too expensive. And I don't think they're going to take over Nvidia anytime soon. But for less advanced chips that people want, it's a good alternative.
All right, we're going to move on to some more stocks on the move right now. We're talking about AppLovin and Robinhood. Take a look at these two stocks. They are both surging after they've been added to the S&P 500. AppLovin up just about 12%. Robinhood also up big. Bryn, up 15%. Wow, look at that chart. Bryn, I'm going to come over to you. You own Robinhood. Your view of it being added to the S&P, obviously you get that boost because it's added to the SPY as well. Just your view on the stock in this move.
Yeah, well, I mean, I've talked about this before. I think it's been exciting to see, this company with Vlad and team grow up right in front of us. I don't think, during the GameStop days, I could have imagined myself buying Robinhood, but they've really evolved and matured. And I think for those who don't know, as the viewers, to get into the S&P, you have to have a market cap screen, there's a liquidity screen, and then most important, there's a profitability screen. And so they're checking all of those boxes, especially from a profitability, just tells you this is a real durable company. And I will say from the brokerage side, their user interface and the bells and whistles they continue to add, I just think are cleaning the clocks of so many of the other firms outside of an Interactive Brokers, which is done so well. So it's just kudos to Vlad and team for maturing to be big enough to be in the S&P.
Oh, yeah, Robinhood shares up 15%. So, Joe, you own Robinhood, but you also own AppLovin, the other stock being added to the S&P. It's also up double digits, hitting an all-time high today. Your view on this company, we do see a lot of these stocks get a boost by being added to the S&P.
Of course.
And even when it gets announced. But I do want to point something out. You look at Trade Desk and Block, since they've been officially added, Both are actually lower.
They have both struggled for sure. You get that initial boost, rather. Look, the perception is that in a world where we're more and more dominated by passive investors, being added, or the other side of that, conversely, is being taken out of the S&P 500 could be dramatically detrimental. So it's not a good day today for Caesars or Enphase or Market Access, but it is a good day for AppLovin because AppLovin needed a catalyst. AppLovin in February post-earnings surged to a new all-time high. It has struggled since then to elevate back above that new all-time high during a period where the S&P has had this remarkable recovery off the April low. So this is kind of the catalyst. Does that get me excited? No, not necessarily. Fundamentally, look, this is still a good company. This is an AI-focused company that is helping with ad targeting, and they're a leader in that industry. But certainly, the valuation is high. The performance since February is indicative of maybe there was some exhaustion. You kind of got the catalyst here if someone owns the name, and it's not something that we can do in the ETF, but I see no problem in kind of reshaping your risk and going out and buying some puts or even taking some profit on some of your ownership.
Just because you brought it up, forward PE of AppLovin's just about 49 right now. Stock at a record high right now. Shares up about 11.5%. All right, before we get to final trades, let's take a quick look at gold hitting a fresh record right now. You can see it's up about 0.75%. Goldman Sachs says mining stocks are a top play into the end of this year. And Bren, you own Freeport.
I do. You know, Freeport is mostly copper. They do some gold. So I think if you're wanting to do a pure gold play, I would go into a gold miner or GLD. But Freeport, if it can break above this 46 range, I think the stock can go to 52. But it's really been stuck at this 45, 46 range as a peak over the last year or so.
All right, again, gold moving higher right now. Freeport McMoran, as you were talking, actually just moving fractionally into the positive as well. All right, moving on now to final trades. Bren, might as well stick with you. You're up first.
I think the economy is slowing, not stalling. Great time to pick up KKR. If they execute, they'll grow earnings and revenue at 30% next year.
Jim.
Yeah, Alphabet. I know it's had quite a run recently. I still think it's attractively priced, and it's one that I think you can buy right here, regardless of what the markets do in the short term. The momentum is clearly there for Alphabet.
Weiss.
Yeah, I agree with that, by the way. It was a toss-up between that and what is my final trade, which is IBIT. Bitcoin came down, it was below 110, and it's slowly making its way back to new highs.
Joe T, you get the last word.
Football season, going to call an audible. By the way, Jets, Giants, another lousy season ahead. But my final trade was TKO. The momentum looks pretty good in TKO. But last week I gave Corning, GLW. Just look now, the momentum is building even further in Corning. I would continue to believe that moves significantly higher.
I think that broke the final trade rule, revisiting a final trade from a week ago.
Also,
that's why
you're calling audible. You could become an Eagles fan. I'm just going to put that out. We're going to leave it there. That does it for halftime.
Hey, I'm George. This is Blue Cloud Trading. It's Monday, September 8th, 2025, 5:27 p.m. As I'm recording this, market's closed. We just saw some clips from CNBC, and guess what? We're going to talk about those stocks, not all of them, but a good chunk of those stocks. Let's take a look at some of them first. Let's see. It's about total 21, folks, between ETFs and stocks. And what I've done is highlighted some of the strongest ones, in my opinion, based on the technicals. Technicals are really important before considering adding a position, in my opinion. You know, you're looking for that stock that you're interested in owning, but then why not check to see how the technicals are looking? And what we do is use Ichimoku indicator, and I'll explain that in a second. But how did the markets perform today? So we'll take a look at those. We'll take a look at those 21 stocks. We won't spend too much time on each one. We're just going to kind of run through them. We're going to look at the index ETFs like the SPY, the QQQ, Russell 2000, the Euro stocks. FEZ is up today, 0.94%, actually the most out of all of these other ETFs. And then we've got some Mag 7 stocks like Tesla, Apple, Meta, Nvidia we're going to cover. And one of our members' requests, we've got ERJ is the ticker symbol. That's Embraer. It's an industrial sector, aerospace, and defense. So let's take a look and see what happened today. Well, the Dow, you can see here, it basically dropped in the morning, came back up, dropped some more, then came basically consolidation. Okay, nothing really occurred here today. It just moved up 0.25%. The NASDAQ actually jumped, gapped up, and then went sideways, and then around 12 o'clock it started giving away some of that, as you can see right there. But it was still up the most, 0.45% out of these four. S&P 500 also gapped up and then dropped throughout the day. It was only up 0.21% compared to 0.21% above Friday's closing price. And then the Russell 2000, basically it was interesting. It gapped up in the morning, dropped, and then around, I don't know, 10 o'clock or so, 10:15, it started moving up. You can see that it closed up also, 0.20. But these were not big moves. Let's take a look at the heat map. This is going to show us how the individual stocks performed for the day. And you can see Broadcom was up 3.21, Oracle 2.44, Palantir. A lot of technology stocks did well today. A lot of the software companies like Uber, CRM, Now, Adobe, IBM was up 3%. Walmart and Costco were up, but Coca-Cola and Pepsi were down. Tesla was down 1.27. Amazon was up 1.51. Google and Meta were down slightly. JP Morgan and Visa were down. Berkshire was down 1.2. Utilities were in the red. So were the telecom services like T-Mobile, Verizon, and AT&T. And then GE was down here in the industrials and RTX. So let's take a look next at the groups. The groups are basically the sectors, and we can see which specific sectors were up the most today. Technology, as I just mentioned, right? We could see that on the heat map, 0.84% up today. Then there was basic materials and consumer cyclical, and the bottom at the bottom was utilities, real estate, and healthcare. But if we look at the 1 week performance, communication services is at the top, energy and utilities financials are at the bottom. Okay, so let's get into. By the way, folks, I did also post a video yesterday, and you probably didn't catch it. You wouldn't have caught it here on YouTube. But if you go to my X page, okay, which is Twitter, the old Twitter, you can find my Blue Cloud Trading page here. I'm under @BlueCloudTrader, okay, @BlueCloudTrader. We reached 700 followers. That's some good news that just happened. I also posted this little chart here earlier this morning, about 7 hours ago, regarding Robinhood, because Robinhood had a nice jump, 13% up. But we'll talk about that in a second. In a few moments, we're going to do the technicals on that. Here's the video. Okay, it's a Patreon video, and you can click on that play button, and it's about 31 minutes. I go over country ETFs and the strongest sectors, ETFs in gold and silver. So check that out. All right, let's get back, folks. Let's get back now to, and this is my YouTube page, Blue Cloud Trading. You can find that link for the Twitter right here under 8 more links. There's a description about my channel, and there it is, okay? You can also become a member. All right, you can also get a $25 coupon for TC2000, the software that I use for the technical analysis. And if you want to check out some of the other stuff, you're welcome to do that, okay? All right. Let's get into it now. Okay, let's get into it. So, start off with a SPY ETF, the S&P 500. Let's move this to the side a little bit. Let's make this chart nice and big here. And look at it. I mean, here's the weekly chart, still in a very strong uptrend, as you can see here. Here it is on the daily, just moseying on up still. It's not moving at a really super an angle that I would like a 45-degree angle, but it is in fact moving steadily up, and maybe that's a good thing, because sometimes when the stock starts to jump to basically move too quickly, then it's also going to typically have a big drop, right? And that can be very volatile. So this is steady, increase in the price is good. QQQ ETF up 0.49%. This one has been a little bit more in a sideways move here. You can see it's consolidating, all right? And that goes back all the way to this date here since August 12th. So it's just been moving sideways for about a month or so. The Dow Jones is also kind of doing something similar where it's just, since this date here, it's been moving sideways. And that date is August 22nd when we broke through this little resistance level of 451.34. Notice how once we broke through that level, we found support when we came back down to it, and we bounced off of it. So that's good. That level, that 451.34, was derived by going all the way back to 2024. All right, so it's based on these prior highs here. You can see how price reacted when it came to that level. It dropped, and the same thing happened back here in January of 2025. It dropped, and it was a big one actually. And then we've come back. We found resistance here a couple of times, 3 times, and now we're above it. So this is all good news. It's just steadily, slowly moving up. Here's the Russell 2000. That's also, I like this one a little bit. This seems a little more momentum. You can see that with the ADX right there moving up. Okay, price is moving up in a nice beautiful 45-degree angle. So I do like that. You've got FEZ. That's the Euro stocks. Some good news here. This was kind of like showing a little bit of weakness last week. I'm sorry, the week before. You can see that was declining, and then we started building up a little bit of a trend right there. We finally got above the Ichimoku cloud. All right, so we're using the Ichimoku indicator, and what we're essentially looking for is price. These little Japanese candlesticks, that is a price, $60.16. We want that to be above the cloud. We want the price to be above the moving averages. The 9 period is the green line, and the red line is the 26. Right now you can't see it because it's on top of the Senko Span B, which is the lower part of the cloud. All right, and the Senko Span A is the top part, the light colored blue line. So we want everything is in order. How we want to see things. We want to see that Senko Span A above Senko Span B, even though it's declining here, it is still above it. 200-day moving average is the dotted yellow line that's moving up steadily. So I like what I'm seeing here with FEC. I think it's got a lot of potential. Like I said, it went up 0.94% when you compare it to these other ETFs. And so the next level of resistance is probably going to be this high right here. So we're going to move our trend line of 61.24. Although that is a pretty significant one. I don't know. It's based on, it's based on this high right here. But it's so close to that level. I think I'm just going to move it up a little bit because I want to see it clear that high. Then we'll be experiencing all-time highs. That 61.50 is the level it needs to clear now. All right. And once it does, and how far are we from that level? We're about 2.2% away. So we're not that far. Okay, it can easily break through there. Maybe even this week, maybe the week after. Who knows? The VIX, which represents momentum, has been steadily just staying in these levels between, the 20 and the 15. You can see how often it's been hitting these lows here, right? And finding support there. We want the VIX to stay low, okay, under the cloud. We want it to stay very docile. We don't want it to be getting wild and jumping and breaking through Ichimoku cloud like back here in April when we got that announcement about the tariffs. Remember the tariffs? April 3rd, around that time, April 2nd, April 3rd, and boom, it jumped over 60, right? A level of 60, and that's what led to the drop, of course, in the markets. I'm sure you guys remember that. That was the April 2nd right there, boom. So that's what volatility can do. But it's declining. That's good. That's a good sign. All right, now let's take a look at the strongest stocks first that they talked about on the halftime report, and then we'll take a look at the other stocks that they also discussed that may not be exactly there, even though some of them were up today. Like CRWV was up 5%. So we'll take a look at all these and let's find out what makes sense. Look at AppLovin, folks. AppLovin, APP, not McLovin. AppLovin. It is up 11.59% today. It had a nice jump. Here's the weekly chart. All right, so it broke through, closed above that level right there. It seems a little bit kind of extended at these levels, though. I'll say that. Here's the high of 525.15, which is now going to be an actual support level, okay? Because it is a prior high that's been broken. So imagine, let me get rid of this here. That line is gone. 525.15 is what it needs to remain above to continue. But it's all-time highs for AppLovin. 11.59%. That's a big move. And it looks like it's just in the beginning stages of moving up. Look at that ADX moving up there. Higher low here from the prior low. We broke this high. We broke that high. Okay. But we are a little bit extended on the weekly chart above the moving averages here. And if you look at the daily chart, same thing. All right, so we'll see what happens with this. Broadcom, AVGO, last week on Friday had a big move. On September 5th, it gapped up to this level, but then the bears took control. The bears took control and they dropped it down to this level. Well, today it gapped up, but it didn't really get anywhere too far up. Like, it didn't basically break the high of Friday. You can see it's inside the candle. It's an inside candle there. So at this point, I would just be holding it. This is not a super ultra bullish candle. I would just, if you happen to have a position in this, I'd be holding it maybe. We are technically sound as far as being above Tenkan-sen and Kijun-sen, above the Ichimoku cloud. But I wouldn't be adding a new position here. Now, if it does pull back closer to that 317.35 or close to the moving averages, and we get a nice bullish candle tomorrow, the next day, or whatever, that might be it's a different story at that point. And you'll be buying it cheaper, right, at a discount, essentially. But look at this on a weekly chart, guys. Okay, we're hitting all-time highs now with Broadcom as well. BLK, BlackRock Incorporated. As you can see here, we broke through that high of 1,084.22 and held up above it. And so it's today we got a buy signal here because it did close slightly above, very, very slightly, by $2 or so above the Tenkan-sen, the 9 period. But it's not something I would be jumping into here because the volume was really low. Really low. You can see that right there, 670,000 shares traded. So there wasn't a lot of momentum or a lot of interest. What about Citigroup? I had a position in this back here, took a little profit, but haven't had a position in this for a little bit. Now this is just continue to move up. Here's a weekly chart and here's a daily chart. It's been consolidating now for a long time. It's been in this range. Do you see that? In that box. Just hit basically up and down, up and down. It hasn't really moved much since this date here of July 24th. So you'd be around the same level as July 23rd right there, okay? So yeah, it's technically sound. It's above the moving averages here, but that resistance level is pretty important to break. Here's a weekly chart. You can see how the candles are smaller and smaller and just kind of just not really moving. The ADX is, that's the momentum. I mean, it's also not looking particularly great. The positive DI is dropping. So yeah, that's all I have to say about that. FCX is Freeport-McMoRan, copper, the basic material sector. Brin's final trade a while back on July 2nd. This one's doing pretty well. We've got a bullish future cloud here. It just broke last week above the cloud, and it's still above it. Here it is on the daily chart, looking good. So I do like FCX. Goldman Sachs, also looking good, but also similar to Citigroup, stuck under that 750.24. I wouldn't be touching that quite yet. All right, so you can see it's been stuck for a while here. Robinhood, today, big day for Robinhood. It actually gapped up in the morning. Let me show you guys. So here it was on Friday. It was right at the cloud, and I want you guys to take a close look at something. How interesting and how relevant this Ichimoku cloud is, because the price kept on finding support. Anytime it came to it, it kept on closing above that cloud. It pierced the cloud right there. You can see the little wick right there. And then closed up. Pierced it right there. Closed above it. Here it just basically stayed above the cloud. Here it pierced it. Came deeper into the Ichimoku cloud, but then finally closed above it. Okay, which represents buying towards the end of the day on Friday. We can see all that, by the way. We can see Friday's action if I switch it to a 5-minute. So let's go back to Friday for a moment, just so I can show you what I'm talking about. Here's Friday. Okay, this was September 5th, Friday. Price dropped. It started getting bought up at these lows here around 11:05 a.m. And you'll also notice how, price just kept on steadily moving up. On the 5-minute chart on Friday, it actually pierced and broke above the Ichimoku cloud. Let me see if I can zoom in a little bit so you can see that better. Just barely. I mean, you can see right there that it's above, okay? And boom, that big gap up, of course, after, that occurred this morning. So if I go to, the daily chart here, you can see the big gap up. That's a big move. From this closing price to that opening price, it was 9.25%, and then it just kept on moving up. Now, here's the problem. It's a problem if you're, if you didn't take profits here. I personally probably would have taken profits at the end of the day today if I had a position in this, which I don't. But I probably would. Why? Because it's coming right back to this level of 117.70. I mean, look how close it is, 117.28. I do like the fact that it's a big candle here. There wasn't any selling that took place towards the end of the day either. So if you look at the 5-minute, it just kept on steadily, moving up, right? But it's coming to that 117.70 level, all right, based on that candle from August 12th, 2025. If we break that 117.70 level, I think we've got a lot more potential here, and I think it's most likely going to break through, okay? But there's no guarantees, and I'm a little bit more conservative and skeptical whenever it stalls. It stalls at the 117.70. Why did it have to stall there? Why did it not just continue breaking through, is my question. Why did it stall at that high? So that's all I'm saying here. Just be cautious with this one. If you start seeing a reverse tomorrow, for example. TKO Group Holdings. Here's the weekly chart. Very strong. And here's the daily. Beautiful. In fact, if you look, it broke this high. That all happened today. It was up 3.34% today. And the ADX is moving up. So I do like this one. It looks good. What about this stock? Allstate Corporation. Inside the cloud. Notice how it doesn't have a blue flag. The rest of these stocks I'm going to discuss right now, I would not recommend based on technicals. The technicals, okay? It's inside the cloud. It's been declining. No on that one. APO, Apollo Asset Management, is in a steady, embedded, 45-degree angle decline. Do you want to be the first one to get in here? How do you know it's not going to continue dropping? It probably will. The momentum is still increasing to the downside here. And look at the Kijinsen here, the red line, just stepping its way down. Okay, you want to jump on that ride? Why not wait for the momentum to change at least, right? Maybe at a minimum, break a trend line for, you know what I'm saying? And then you've got something. Or maybe create a higher high, folks. A higher high, which would have to take out this high right here. That's all I'm saying. CB. Chubb Corporation is inside the cloud and under the 200-day. Notice how it's been stalling at that 200 right there and reversed, but finding support at the Tengen-sen, the 9 period, with a nice hammer. So if it can break through this 200 plus the cloud, okay, that makes sense at that point. Right now, I would stay out of it. CHYM in also another 45-degree decline. So no on CHYM. That's Chime Financial Inc. Profit margins are negative 49.05%. That might be part of the reason, right? Since its inception, not inception, but since its opening price here on June 12th of 2025, when they became a public company, this thing has dropped 43.35%. CRWV, also in a decline. Under the Ichimoku cloud, we've got a bearish cloud. That's when we've got the Senkospan A under the Senkospan B. Tengen-sen is under the Kijinsen. That's also bearish. And price is under both moving averages and the cloud. And then this white line that you see in the background here that I didn't mention earlier is the closing price. Okay, that's today's closing price, projected 26 periods ago. And when you see that white line under the candle 26 periods ago, that candle right there, if it's underneath it, that's bearish. When it's above, like it was over here, that's bullish. What's interesting about this indicator is the fact that it projects not only into the future parts of it, like the cloud itself, 26 periods into the future, but also the Chiku span that projects 26 periods into the past. So you're getting a little bit of some insights, right? And these are all based on mathematical equations. They take the midpoint of the Tengen-sen, the 9 period and the 26 period right here, and then that's what creates the Senkospan A that you see right there. Okay, 26 periods into the future. The purple line is basically the midpoint of the last 52 periods, and that's projected 26 periods into the future. The Tengen-sen is the midpoint of the last 9 periods, and the Kijinsen, the red line, is the midpoint of the last 26 periods. So it's the highs and lows divided by 2. That's the midpoint. The highs and lows of each candle, right? All right, let's keep going. FIG, Figma Inc., technology sector, software application. No thank you. Okay, you can see the decline there. That's the beautiful thing about Ichimoku is at a glance, which is what Ichimoku stands for. You can tell. Stay out of it. IBIT, inside the cloud. Another reason why you should not be adding yet. I think Steve Weiss said something about, he recommended this at the end of the show as his final trade. I don't think this is the right time to be adding here. We're still under the Kijinsen. We're not experiencing all-time highs like you said that we were. The all-time highs were back here, okay? 69.90. We're at 63.70. So, no, we are not experiencing new highs here. We experienced it back here on August 13th. All right, so let's correct that. If it once it gets above that level, okay, then that's a different story. But what I'm seeing here with IBIT, and again, with Bitcoin, you want to trade that a little differently than you do stocks and ETFs. It's very volatile. It's more about like, you know, having a specific percentage of your portfolio in Bitcoin. And I wouldn't recommend, you know, large amounts. Like I'm talking about 3%, maybe 5% of your portfolio in crypto, whether it's a combination of Bitcoin and Ethereum, which you can, you know, you can buy this ETF and then you basically have some exposure to the to Bitcoin. You know, let's look at ETH, for example. That's Ethereum. You know, it's looking a little bit better. It's looking a little stronger here above the Kijinsen. It looks like it's going to pop pretty soon. So if I had to pick right now between adding, you know, either ETH or Bitcoin, IBIT, I'm picking ETH, Ethereum. Bitcoin is still inside the cloud. All right, KKR, inside the Ichimoku cloud, no on this one, okay? KRE is above the Tengen-sen, but, I'm sorry, I take that back. It's above the cloud, but it's not above the Tengen-sen, the 9 period. It's underneath barely. Here's the weekly chart. Overall, it's not a bad looking chart, but I would just wait maybe a day for this thing to pop right back above and close above the 9 period first. PNC, same situation. They're currently under the Tengen-sen. So it had that nice little run. Showing a little weakness here today, down 0.31%. Here's the weekly chart. That also looks pretty good for the most part, okay? Charles Schwab on the weekly chart is under the Tengen-sen. No. And on the daily, it's inside the cloud. So no thank you. TTD is also under the Ichimoku cloud. No on that one. Look at this. This is so interesting, right? That's why the reason why I also superimpose the 200-day is because it is a well-respected moving average, as we all know, right? And if it's when price comes to it, usually there's a reaction. And if it breaks, obviously, then it's got some potential. But if look at that, it just gapped down, huge gap down for the trade desk. It dropped approximately 35% on August 7th, right? Yeah, August 7th. My goodness, that's a big drop. So that's the kind of thing the stock market's very unpredictable. You never know what's going to happen. And an earnings announcement can basically break a stock, and it broke that. Especially that 200-day broke it, didn't it? So never add a position. For example, if you're this close to the 200-day moving average, if you're right underneath it, wait, folks, until it closes above the 200-day at least. I'm not suggesting that that's the reason why this dropped, but there was a reason why the price kept on stalling at that level, obviously, for multiple days. All right, let's keep going. XYZ, stuck. It looks like it's inside the Ichimoku cloud, so no on that one as well. Chiku span is underpriced. Do you see that right there? For a few days now, five, what is that, 6 days? It's underneath the price. That's the white line there. Okay, so that's all of those 21 stocks. Now we're going to take a look at the Mag 7s. These 4, some of the other stocks I'm not going to cover because they may be in the members-only portfolio. Those I do cover in the members-only video that I did this weekend. Right here, it was 1 hour and 16 minutes long. Consider becoming a member. To become a member, to watch this video where I go over my entire portfolio, all you need to do is click on this link right here at the top. You click on that. It will bring you to this new pop-up page here where it says join this channel. You can either become a Blue Cloud supporter. You won't be able to see the video under this, but you will be supporting the channel, which is very positive for, so that we can continue bringing these videos to you. I'm very thankful for those of you who have become Blue Cloud supporters. The next level is Blue Cloud Trader. This is where you'll get access to those exclusive member-only videos. And then if you want to go one step further up, Blue Cloud Legend. Okay, why? Because you'll have access not only to those member-only videos, but some of my recorded day trading videos, as well as the daily trade updates, which I post. What happens is once you become a member, there'll be a new tab that pops up here called Membership. All right, and then you'll be able to access those posts, the daily posts, all my trades basically of the day, trades that I'm added and closed out of, and I'll basically post those before the market close. Okay, now let's get back to what we're talking about. Tesla on the daily chart is above the moving averages. It's above the cloud. It looks pretty bullish on the daily chart, but on the weekly, it's not looking as perfect as I'd like it to see. I mean, look at the cloud itself. This is the one negative thing. I mean, everything else looks and appears to be all right because price is above the cloud, Tenkan-sen is above the Kijun-sen, price is above the 200 on the weekly. But look at that cloud. You know, the Senko Span B is above the Senko Span A, and it's a wide cloud, which means that it's going to be harder. I don't know. I think it's going to be harder for price to continue moving up here, but maybe I'm wrong. Look at also take a look at the momentum. Do you see this? Hold on, let me show you. It's been declining. There's no move to the upside with the green line moving up and the negative line moving down, which is essentially what you want to see, like we saw back here. If you look straight up, and that led to a nice move. So we're not seeing that here. So I'd be really skeptical about Tesla at this point still. And it was down today, down 1.27%. A bearish engulfing pattern formed right here. Okay, but it's holding up. So Apple also pulled back down 0.76% after that reversal candle, the doji right there, or spinning top. And here's the weekly chart. All right, still, we've got a bearish cloud here, so I would not be recommending Apple yet. Meta, we've got the faster moving average. The green line is under the red line. That's also bearish. The Chiku span, the white line, is under price. Okay, so Meta doesn't look good on the daily. What about the weekly chart? On the weekly, it's not terrible. Okay, it's above the Tenkan-sen, Kijun-sen. The cloud's still bullish. So I'd, probably want to hold off on Meta for a bit. Nvidia. Now I closed my position back on August 29th. I had it a few times. Back here on June 26th, and I closed out of it on August 19th for a 15.5% profit. Then I added it again on August 22nd when it broke through the Tenkan-sen right there, and then it basically moved up, and then of course the earnings announcement came out, and then it dropped. And I closed my position, and it was a flat trade, but it's continued to move down, right? So from the open price there, it's actually down 5.4%. It's currently under the 168.80 level. That level is derived by looking at this prior low here. Whoops. Right here. See that candle? It came down to that level. And right here was finding some support for like 3 days. Basically, right there, and right there. And then it closed underneath, closed in the cloud, stayed underneath, inside the cloud still for Nvidia on the daily. It doesn't mean that this is the end of Nvidia. It doesn't mean that this is going to lead to a huge decline in Nvidia. It's just telling me that right now is not the right time to be adding. In fact, if you look at the moving averages, they've merged. See how the green line here was above the red line? The 9 period was above the red line there. Okay, then it crossed under, and now they've been basically at the same level. They're right on top of each other. And that's another interesting thing that can occur with the moving averages of Ichimoku, because it can also flatten out like you see right there. So there's equilibrium here. It's just unknown at this point. I'd like to see some strength. I want to see Nvidia pop back above the cloud, break through that Tenkan-sen. That's going to be a lot more of an optimal situation if you're thinking about buying Nvidia. Take a look at the also over here, folks. this right here. Do you see the crossover that took place here with the directional movement index? That was on the day, that was from August 19th. Let me see. Yeah, that's August 19th. And since August 19th, the red line has remained above the green line. So that's another concern for me. Look how long that bullish move where the green line, the positive DI9, was above the negative DI9. Right now, we don't have that. So it's not a bad idea to look at multiple, a couple of indicators. You don't need to have 1,000, but adding this directional movement index does help me identify what's really happening also as far as the direction of the trend. So we're going to look at ERJ next. This is one of our members' requests, and this one's coming close to a level of resistance. I can see that right here. Let's go ahead and throw that level. The high is 61.65. Let's put that in there. Let's go ahead and circle that here. ERJ. So it's coming very close to that level. If it breaks through, that's going to be really interesting. Now, what I don't like is this dark cloud cover pattern right here. These two candles are, it's called the dark cloud cover. Let me show you guys that real quick. All we need to do is look at the candle pattern reference sheet, which you can also find on my Twitter page, by the way. You can find that once you're on Twitter, right here. Click on this, highlights. Okay, this is one of the tabs. Scroll down a little bit. And there it is. You can download it there. There's also the patterns reference sheet too. So yeah, basically we've got a dark cloud cover. Let me show you that again. It's under the double candle patterns here. All right. And this is what it looks like right here. What you're looking at is a bullish candle after a move up. Okay. You're seeing that nice bullish candle. And then what happens the very next day is price actually gaps up. So it's looking really bullish. Things are looking great. And then the bears take control and they push the price down. They just keep on pushing it. It doesn't close underneath the low or the opening price, but it closes, the price closes within the body of the prior candle. And they call that a dark cloud cover because it looks like like a dark cloud hovering above. So that's basically, essentially what we've got here. Okay, gapped up. It's not perfect, but you can see it gapped up, dropped, closed within the body. So that's, it's a higher probability. What does that mean? Does that mean that it's definitely going to drop tomorrow? Of course not. It could certainly just gap up and break through that 61.65 level. But the fact that it formed tells me that there's a higher probability that at least for tomorrow on the daily chart, price will drop. And it might come back and retest. Okay, it might come back and retest the moving averages, the 9 and the 26, and then maybe get a bounce off of that. Because anytime price comes, again, close to a level of support, it sometimes can bounce and then break, more, with a little bit more momentum to the upside. Now, the good news here is if you look down here at the directional movement index, it is still moving up, the ADX, but that positive DI dropped a little bit, and that's what you're seeing right there too. All right, so ideally you would want that green line to be moving up as well, while the red line is moving down and the ADX is moving up. All right, so like it was, I'll give you an example. Let's go back in time a little bit right here. Do you see the green line right there was above the red line? The ADX was dropping and then it started moving up right about there. Okay, do you see how the ADX is up? So if we go straight up, that occurred right there. What else was happening? Price was above the Ichimoku cloud. It also broke through this little level of resistance right there. And then it moved up quite a bit. Reached that 61.65 level, dropped. Came back, didn't quite reach it here, dropped some more. Came back up to it now, and it's retesting it. The good news is this is a ascending triangle pattern. Do you see that higher low right here? So that is bullish if and when price breaks through the 61.65. So watch out for that. Wait for that to happen. Just be patient. Patience is a virtue, right? Weekly chart. There it is on the weekly chart. You can see it right there too. So it's just stalling. It needs to break through. The next earnings are on November 14th, so it's a little whiles ahead from where we are currently. But the profit margin is negative 2.32%. Sales growth is a little negative there. There are some better opportunities out there, but you never know. This thing also could continue to move up. So we'll see. And guess what, guys? That is going to do it for this video. Thank you for watching. Thank you for supporting the channel. Don't forget to like, subscribe, hit the notification bell so that my videos pop up on your subscriptions. And remember, that's free to subscribe. You can subscribe for free. But then when you're ready to join, click that link right there. And that will allow you to get the extra content right down below. All right. Have a good one.